and welcome to part 2 of this series. We're going to look at how you actually create rules for your strategy, different trading styles, investing versus trading. I'm going to talk a little bit about cryptocurrencies and stocks as well. What you want to get to is a stage where you really know your data. Here, you're having an upward trend and you're having a consolidation going sideways, could be called a flag, putting the entry a little bit above, stop loss a bit below. The risk reward is 3-1. So have a look at this. In the beginning, you have $2,000, and at the end of the year, you have $4,000, right? Because you're not only making 3% a month, you're even adding 100 each month as well. Next year, 7,000. Next year, 12,000. Next year, 18,000. And after 15 years, you would have broken the £1 million mark, and now you wish you started with this years ago. Don't be intimidated by this. Focus on learning the skill. When you have learned the skill, you will be able to do this. Hey everyone, and welcome to part 2 of this series here. Now, for those of you that didn't watch part 1, make sure you do, because in that we go through the majority of the things you need to think about to be profitable with your trading. Essentially, what we're going to do is to build on that today. So we're going to be looking at, as an example, we're going to look at how you actually create rules for your strategy. We're going to create rules, which you will be able to download in the description below. We're going to do some trading together, some back testing together, so you can see really what it would take really to become really good at this. So that's the main focus. And we're also going to touch upon the difference between different trading styles, investing versus trading. I'm going to talk a little bit about cryptocurrencies and stocks as well, just so you know all these different things that you can trade and the different assets as well. So hopefully that makes sense. And the intention of this part 1 and part 2 is really so you can really learn how to trade without needing to buy a lot of courses. And frankly speaking, you know, my thing about this, about buying courses and learning from others, I think is all about, you need to find someone that you trust, that you think what that person says makes sense. And then I think the reason to get into a course is really to get into the community, and also to get into the to get a coach and a mentor, like all the greatest in the world, everything from movie stars to Cristiano Ronaldo to Messi and Serena Williams, you know, the tennis player. All of these different world-class athletes and movie stars and really even, you know, business owners, you name it, most of them have coaches and mentors. So it is a way to really do it a lot faster. If you do it by yourself, there is a high probability that you will lose over time, right? So I've seen it so many times after we have had the opportunity to teach tens of thousands of people on how to do this over the years. So the common theme, and this is for me as well, when I started, and you know, you start with watching YouTube, you start really trying to figure out what to do and how to do it. And I mean, let's face it, on YouTube there's hundreds of strategies, if not thousands, and everyone tells you to do things differently, and many of them work. Not all of them, but many work. And I think the key in trading and investing is to make you work. So we'll make some rules regarding that as well. I'm going to explain what that is all about. But imagine you have like a coach and mentor that says, well, actually, all you need to do is this. You need to focus on this right now. You don't need to jump between strategies. You need to focus on making this one strategy that makes sense to you and that has a higher probability of succeeding than not successful. So those are the things that a mentor and coach can do, or to say, listen, you need to do this different. You need to adjust this, and then it has a high probability of working. So that's what we need to focus on. We need to focus on finding a few things and tweaking a few things so trading works for you. Now, the thing is, we all have different personality types. So if I gave the same strategy to 2 or 3 people, the probability is that you're not going to get the same results. So what usually needs to happen is that you need to learn it in a certain way that fits your personality. Another one needs to learn it as slightly different and need to adjust it a little bit so it fits that person's personality. But the strategy that you're about to learn is a version of a strategy that I find is very simple to learn, and you just need to practice getting to really know it in order for it to make sense. So that's what we're going to be talking about in this session today. We're going to be looking a lot more in detail on how to actually create that strategy, backtest together, and making sure we do what we can to make it successful. That is what this is going to be all about. So basically, if we start from the beginning, there are a few things a strategy really needs. So I want to start by looking at this here, right? So we need to know what we are entering into, all right? That's the first thing. What are we entering into? What assets are you going to be trading? So I don't think you can be trading all the different assets, which some people do try to do, which gets very overwhelming. It might be better to pick 1 or 2 or 3 assets and really get to know them and build a relationships with them. We also need to know where we're entering. So where are we entering into the opportunity? And this is, of course, really important to know. Most people go based on what they're feeling at the moment. That's the reason they're going into the asset, which is obviously not a great reason to enter. And you want to find out something where the probability is higher that you've really been testing. And I think that's a reason to get a course from someone you trust, because you will hopefully learn a strategy that is tested. And I'm going to show you what that looks like when a strategy is tested as well. So what we're entering into, where we're entering, and also where are we exiting. So where are we exiting? Where to exit with a loss and with a profit. And the cool thing is, the thing is, you need to know this before you're entering, right? You don't go into a car driving without knowing where you're driving, without knowing that the seatbelt is working. Hard to test the airbag, but you know what I'm saying here, right? So we need to know what we're entering into, where we're entering, and where we're entering, so where to enter, and also where to exit with a loss or a profit. And also we need to know our risk before we go in. And usually we risk, as you learned in part 1, like I said, if you didn't watch it, make sure you do. We lose 1% per trade. I think that's a great thing to do. But we also need to know, and we also need to look at how much more profit are we making. So all these things are super important for us to know what to do and how to do it. And obviously we're going to be looking at also the different brokers you can be using in order to make this a really good success as well. So now I think what we're going to be starting with today is I'm going to show you some of the basics here. We're going to go through the rules, because if you remember, in part 1 we went through how to use TradingView, how to do analysis, how to find support and resistance, and I did show you a part of the breakout strategy as well. So you will be well equipped to start going over the rules that we're going to be doing, and then we're going to spend a lot of time focusing on practicing on this. So now let's dive into the rules. So looking at the rules, what you will see is that I think we talked about this briefly last time, right? And if you click the link below, you will be able to download your version of the rules as well, so you can use as a reference point. So the way that I usually try to do this, which I think works really well, is I do try to draw out the support and resistance on the 4-hour chart. I make sure I follow the trend, higher highs and higher lows, as we spoke about in the previous video. And then I find patterns, reversal patterns, which is a pattern that is created at a strong level of support. Could be triangles, double bottoms, and it bounces from a good level of support. And in order to enter, I would like the price to be above the 50 moving average. If we look at a continuation pattern instead, that will be finding your breakouts. So this is from a resistance or a support between zones. Could be flags or triangles as well. And price should be above the 50 simple moving average in order to do that as well, or below if you're going short. Entry slightly above the consolidation or below. Stop loss slightly below the latest bottom or above the latest level of support, below the latest support or above the latest level of resistance. And then we're aiming for 3 to 1. And we're going to talk a little bit more about trade management and the risk management as well, like 1% trade per loss. I am doing max 2% per day and then 4% per week. And the first stage of this, which we usually talk about, I usually scroll back and find good trades. We did start that process in the previous session as well that we had, and I want to do that a little bit more today. So what you want to get to is a stage where you really know your data, and all this can be a little bit abstract, but if you now take this data and you put it into a picture, it hopefully will make a little bit more sense. As an example, here you're having an upward trend, and you're having a consolidation going sideways, could be called a flag, and then you are putting the entry a little bit above, stop loss a bit below this candle in this instance. The risk reward is 3-1. So you have some pictures of what good trades looks like. Here are two more alternatives. So here you would have a really good trade where the breakout happens just, you see here, the green line is the moving average. We'll dive into that in a moment. So the price is above the green line, that's the 50 moving average, simple moving average, and it's creating a consolidation around that, and then you have a solid breakout above that as well. So that's exactly what we're looking for, and this is another example. It's at a good level of support, breaking out of that, and the price goes above the moving average, and it's trending up, and then you have the breakout, and that's a level I can go in. So the trick is, of course, to pick these really good opportunities. But step number one, now when you have rules that you can download as well, is to look back and see how many of these you can find. So step one would be to now go back and find a couple of A+ trades where so you can scroll back and just get familiar with the chart. That's the first step that I think is really powerful to do. So if we now let's pick the NASDAQ as an example. You can do this on stocks, you can do this on anything. I'm just gonna change the color here, make this a bit larger, and make it kind of green. I'm a little bit colorblind, to be honest, but hopefully that doesn't not gonna change too much. So basically, the first stage is for me to just scroll back and see, okay, how many good trades can I find, both long and short. So I start to make my eyes familiarized with what I should be looking for. So here is a great example. Price is now below the moving average. And first, let's go through. And by the way, if this is a bit overwhelming for you, make sure that you look at the part one as well. And we do also have upcoming workshops where we dive a bit more into this. That is live. If you go into the description, you'll find out more about the workshops. And you find out more about as well the other video we went through when we did go through the basics again. So hopefully that makes sense. So we're not taking from the beginning, but I do want to show you the moving average. So what is the moving average? Well, I want you to imagine, just so we can really make sure this becomes clear for you. The moving average is it shows you exactly what it says, a moving average. And a moving average shows you, if I put the moving average, there's two different ones, but we're going to focus on the one we're going to be using. So if I choose a simple moving average, which is known as, there we go, average, which is known as one way of doing it, right? That is just shows you the average price, not a question mark, it's supposed to be an equal mark, shows you the average price over time. So if, for example, the price, let's imagine the price moves like this here, right? This is the price. You see a chart, it moves like this. So what's going to happen is if we now look, as I would like to, we look at the 50 SMA, the 50 simple moving average, it shows you the average development of the last 50 candles. So if we look at the hourly chart, it's going to show me at any given point the average movement of the 50 last candles, and it's going to be displayed in a line like this. So circling back to the chart, you can see that if I at any given point just look at any of these candles, you will see that they represent a point in time. And if you do take the average 50, it's going to give you a direction of this line. So this will obviously be trending down if the last 50 candles are mostly negative or red. But if they're green and positive and bullish, then it's going to be trending up. So it's going to be it's going to trend up, right? Then the majority of the last 50 candles are green. So it helps us to see what are the probabilities of the market going up and down. And that's all we're looking for here. What are the probabilities of it moving up and down? So basically now when we scroll back, we're gonna just see and test so this makes sense to us and just see for ourselves that this is possible what we're doing here. So you can see here. And we talked about the risk reward and the probability in the last video as well. So this is purely to find out and now to start the process of mastering a strategy, because it's all about the probability that we're playing, which means you're both going to have wins and you're going to have losses, and both of them are part of the game. And it's not as simple as just going to YouTube and the gurus are telling you that, yep, this is the holy grail. I have not found anything that is a holy grail. I'm not sure if you have either. But I don't think there is something like it, you know? So we need to practice on finding something that we trust that's going to make us money over time, where the probability is higher that we will. So here is another one that almost went up to 3%, and you can see this is exactly what we will be looking for. It went down to a level of support and created a higher high, and then it created a higher low and a higher high, and that's the moment we would get in. So it would look like this. We're going to be practicing this a little bit here as well. And if I scroll back up, you can see here we have a scenario where we now are getting lower highs and lower lows, and this could have been a very nice and solid breakout to the downside instead, where you quite easily could have made 3 or 4 or 5%. Now do remember to remind you that we want to have a couple of things here lining up. One, if I'm going to go short, making money going down, the price needs to be below the 50 simple moving average, as an example. Check. And the simple moving average needs to be trending down, showing me that the majority of the candles are trending down as well. And then number two, I want to make sure that I have a chart pattern, which is this. This is a triangle we're looking at here, where you have lower highs and lower lows. That goes into the market structure. Lower highs and eventually lower lows. And that's where you could jump in. Boom. And now the probability is we will have a drop in the market. I don't know how big or how much, but in this scenario, we would have done really well, you know? And if you think about it, what we went through in the previous episode as well, you can literally lose 7 out of 10 trades and still make money. And obviously, the more you practice, the better you will become. And I'm going to show you some of the track record that we have so you can see for yourself. So now let's look at some other ones, and maybe already after doing 3 examples, you can already see like this might actually be working. So you're now building up the confidence you need in order to get this started and to understand that this could maybe be a good strategy that you can use. Here you have something else. You have a ascending triangle, a little bit trickier because it's not a big pattern, it's a smaller one. But something you could do, you can see here, the price bounced at a previous level of resistance over here, turned to support. Price is above the moving average, trending up. And we could have placed a trade for when it broke above that region right there, like that. Boom. And that could also have made 3% as an example, you know? So that's another one. And down here, it looks very similar to the previous one. You have here a little bit the same. And you have a previous level of support over here, turn to support again. The price is breaking above the moving average, and it's trending up as well, showing me that the majority of the candles are going up, right? So here's another one that could be good. Now, will you have losses as well? Oh, of course you will have losses. That is part of the game. The first step of the exercise is just to practice your mind seeing the right patterns. All right. So this is step number 1 that I want you to do. And this is where having a coach and a mentor becomes quite handy, because obviously if you have a coach and a mentor, they can then guide you on this journey and give you feedback on what you're doing here. Right. So now we've done the first stage. We have kind of mapped down the rules a little bit. We're gonna dissect them a bit further by now doing some back testing and then some live trading as well, just to show you how this works. I'm gonna show you the process of documenting this as well. So now let's dive into doing some back testing with this strategy to see if we can start seeing these patterns and start kind of trading as if this was live as well. So when we now gone through the A+ trades or the scrolling back to find good trades, what I usually like to do is to go over to my trading diary, and I will have a tab in here where I kind of put in my A+ trades, if that makes sense. So what I've done now, or what we have done on this session so far, is to map out what are we actually looking for and how does that kind of play out so we get a recipe. I want you to imagine for a moment that you could be baking a cake, you could be following a recipe to some extent, right? And I want to imagine cooking a dish. And what if you maybe read the recipe, like reading the rules of a trading strategy, but you didn't really have a reference point, like you didn't have a picture of it, you couldn't see it in front of you. Now I would guess you won't remember much of it, but what if you had a picture of what it should look like and you can read it and look at it before you cook it? I bet it would be a lot better. But the first time you cook it, it might not be amazing. But I can promise you one thing, the more times you cook it, the better it will be. So therefore, every single week I have what I like to call the A+ trade list. So imagine you have this picture in front of you and you look at this every single week. So every week I would look at this to ensure I know exactly what I'm doing. So that is really step number 2 here. So when you're in here, you want to make sure you scroll back, find good trades, and create a checklist where you have maybe 10 or 15 of those. Now, the next step is the demo trading and back testing as well. Let me tell you why this is important. Now, looking at the trading here, this is our portfolio that we've been tracking for many, many years. This is literally the, let's have a look here. So I'm going to have a look and see what I can find. 2000 and, well, this is from 2022, like July 2022, and all the way down. I am going to remove the 2024 results because we do have that somewhere else. So let me just do this, boink, there we go. So now we have from 2022, July 2022, all the way to end of 2023. As you can see, I've documented every single one of my trades. Now what you can see in here is that I have an 89% return during that time frame. And I also have a 60% win ratio, which means if I place 10 trades, I win 6 and I lose 4. And I have a drawdown, which means I've lost 3 trades consecutively with a total profit of 43,000. So almost doubling the account during that time with very low risk. And the reason this really works, and you can see I have months, which you can see over here, I have months where I am gaining 4%, I'm losing 1%, making 11%, winning 6%, 3%, etc. And you will be able to download a version of this as well. Of course, you can start tracking your own trading. And of course, depending on who you ask, there's a lot of data that people are tracking. I think this is enough that you know your win ratio, that you know your drawdown, you know your average win and loss, the expected value in each trade. So you know that if you place 100 trades, we've placed 100 trades here, 98, you know that the expected value is 0.64% per trade despite being in loss or win. And what's really powerful with this is, you see here, I have a 1% loss on these ones, but here is a 12% win. So usually every year, if you get really good at the 2 golden rules, which we discussed, which is letting your profits win and cutting your losses short, then this result will show. Now, do you think I'm getting a lot of confidence by having this result? The answer would be yes, of course. Looking here at the trading 2024, the same here, 57%, 57% win ratio, so very close to the same, and a 67% return. And you can see the very same story here, 7%, minus 2% in February, plus 5, plus 2, minus 1, plus 6, plus 10, plus 5, plus 11, plus 3, plus 6, and minus 1 in December. It's all about really waiting for those opportunities to really come through. So you get better at your trading, right? And the cool thing is, if you look at most of these right here, most of these links, you would be surprised, but most of them will look the same. Now we do teach, and we have a few different strategies we're using, but the one that is performing the best is the one that you're actually learning here as well. And we have others that are doing really well, but obviously it's all about learning these. Now, if you look at many of these, if you open the links, which is what I'm doing on a weekly basis, really practicing this, really going into this and looking back at my result, you will see that many of these are looking very much the same. So here you have one, right? So this is on silver. You see an ascending triangle as I've been discussing. The same on gold, ascending triangle, boom, 3%. On oil, ascending triangle, minus 1%. That is part of the game, and that is fun. We have losses as well. In fact, I lose 4 out of 10 trades. You can see here as well. A nice ascending triangle, a loss, which is perfectly fine. Here we have another one. Very nice trade. We had a good breakout from Ethereum, good ascending triangle, also really good. Another one on gold, ascending triangle, but you see they're all looking the same. Some wins, some losses. Both are fine. It is perfectly fine to have both. In fact, I would even argue there's no way that you can trade without having both losses and wins, you know? So having a loss is equally as important and equally as common almost to having a win. And this is swing trading. So what I do here is literally I spend maybe half an hour to 40 minutes a day. So I don't spend that much time. So anyone can literally do this. And we are now going to test this out to see if this is really true. And just to circle back to the results, you can see here that then if we move over to 2025, we're up 36% so far. But you can see in January, 5%, February, minus 2.6, March, minus 2.3. Not really that great. April, minus 0.4, May, 0.10, June, 1.10, and July, 18%, and August, 13%. As an example. And you can see we're documenting every single one of the trades. And funnily enough, the win ratio has gone down a little bit. We're talking about around 50% win ratio. But would you agree with me that I'm very confident that I can perform really well with my trading because I have the data backing it? So I just know that if I place 10 trades, I probably lose 5, I win 5. But my winnings are vastly going to outperform the losses, as you can see here. 3%, 3%, minus 1, 3%, minus 1, minus 1, right? Plus 1. And so over time, you will do really well. And eventually, you will get plus 10. You will get plus 5, right? So looking at the plus 10, this is a slightly different strategy, but the principle remains. So here you can see we entered and then boom, right? All the way up here, the price went and we kept moving our stop loss up, which is all about the trade management, which we'll talk about as well. So what we're going to do next is to actually test this now and do some back testing. And you can see here I've started already. So I just want to show you a little bit of results in here. So what you can see is that I had a 30% return so far out of these back tested trades. You might not know what that is yet, but we'll dive into it. And we have a win rate of 46%. That means out of 10 trades, we will win 4.6 and lose the rest. Doesn't matter, we're still gonna have really good results over time. So the only thing I want to mention before we dive into the back testing is that despite if we win or lose, it really does not matter. So if I backtest 10 trades, I lose 5 of them, I know that is going to happen because I know my numbers. So just to show you what we looked at last time, because this is worth repeating because it's very easy to forget, of course, as well. But have a look at this. So when we have a look at this sheet right here, do you remember that now we've looked, right? This is statistically, but now we know, and we looked at what if I have a 50% win ratio? What if I win 50% of my trades, right over here? Well, it's actually a 29% probability that I'm going to lose 7 trades in a row, as an example, as you can see down here. So is it possible? Yes. Is it likely? No. And I'm resting towards that. But despite that, as long as I'm sticking to my reward risk ratio, that I'm winning a lot more than I lose, I will make a lot of money over time. So now there's a few metrics that I'm at least looking at when I'm backtesting. Number one, you can do this on any assets. I would propose maybe you start with one or two, but you can do it with Nike, with Dow Jones, with gold, with Nasdaq. You can do it with currencies. It doesn't matter. But I would spend the time getting to know an asset. So what do? First step is we go to a random asset, and I can go to a random asset just to prove this to you as well. I know the indices really well, like gold, and of course you don't know that, but I'm gonna show you that, this works, and I'm not gonna kind of fabricate it if you like. So I'm gonna press replay. This is using TradingView, which we looked closer at during the session we had, right, the part one. And if I go back and press on random chart, it takes me back to a random point in time. This happens to be in August 2019. And I have literally no clue what's going to happen next. We are going to be trading on the 1 hour chart, and we're going to be trying to apply what you now learned and see if this works over time. So let's have a look, shall we? So now what we need to do first is, before we now play this forward, backtesting means you're going back in time to check the data historically to get an idea for how it can perform in the future. So looking at this now, what you can see is if I press forward, you see that one candle appears on the chart. And if I keep pressing this, more candles will appear. So what are we going to do? So we now can establish that we have a downward trend, right? So downward, we have lower highs and lower lows. All I need now is a nice looking pattern. So we know where the market might turn around, and or it might continue. So here we have an area, and I don't know if it's going to turn there, but we are going to wait for a chart pattern. We have an area where the market might turn. But remember, the price needs to be above the moving average for us to enter, so we don't enter any fake breakouts. If it does keep going down, well, we need to wait until there's a pattern, but we definitely have a free fall in the market at the moment. So the next level of support where the market can turn is here. And all I gotta do is to be patient for something to happen so I can make a decision what to do here. We were a little bit quick. This here could have been a really solid trade where it went a bit sideways before breaking down. Even on the 1 hour over here, we had a small descending triangle before the market did go down as well. So let us see what happens here. So now we're bouncing up a little bit, and now finally we're getting some kind of consolidation. So we need to see what happens. We're now above the moving average. All we would need now is for the moving average to turn up a little bit, which it hasn't. You see, it's still trending down. So currently it means that in the last 50 candles, the majority of those are still trending down. So now something might be happening. We've gone down to around an area of level of support, and now we're creating a little bit of an ascending triangle, and where we have a higher low and maybe even a higher high. So we just need to wait for that. But now the stars are aligning for us to go long according to our strategy. So now this might be a good choice. Now, could this be a loss? Absolutely. So we would place the entry a little bit above this area where it's looking to break out. Stop loss, I would put a little bit below the last level of support, and we would aim for a 3% target. So this is the way you can test any strategy. And this is the way that I think is a very good way of doing it, because you need to see with your own eyes what's happening here. So we're now looking at, what are we looking at? We're looking at the US 500. US 500, this is the S&P 500. We put the link in, and now we're going to see what the result is. And when, or if you have a coach, then what's going to happen is they can give you feedback on this. It is tough by yourself, but they can do that. So let's see what happens now. So now we're not in yet. We're placing a stop order, remember, on these type of trades. We want to enter with the momentum. So now we're in the trade. It just went up to our entry. So we just went into the trade here. So now let's see what happens. It could, as I said before, it could go straight down and take us out. We don't know. We have zero control over it. The only thing that I have control of is that I follow my process. That's the only thing I have control of. And now we're getting into the trade management. So usually when I'm up around 1% in profit, I then want to make the trade risk-free. So what do, I then do this. Boom, I put the stop loss in. And by the way, just to show you, you can actually, on TradingView, there's a really cool thing you can do. So I'm just going to go back in time so you can see for yourself. So we can actually show you that you can buy and sell here. So base now, if I double click on this, I can put in my account size, the risk, and I always risk 1% per trade. And that's all I need to do. So if my account size is 100,000, I put 100,000 here. I press OK. And now you can see that it says quantity QTY 30. So down here in the down right corner, I can now change this and put in 30, which is the quantity. I press buy, and now I'm gamifying this a little bit. You don't need to do this, but you can do. And in here, we now have this. I'm not sure if I can make it a bit larger. I don't think so, but you can see the blue box here, which shows you the position. I can draw down my stop loss like this. So now I'm risking around 1%. It's not going to be exact because you can only enter with market order here. So now we can gamify this a bit. So now as the price moves up, this is where we were. You can see now that I'm up $1,000 in this box, right? And now I move my stop loss to break even. So I will pull up my stop loss, and you can do the same. Like if you're using MT5 or MT4, you can do the same thing. And now let's see what happens. So now we're in a risk-free trade. Now anything can happen. It can go down, it can go up. My next target would be 2%. And if you're thinking I'm staring at the screen all day, guess again, because I don't. What I do is I will literally place a trade. When I'm in the trade, I get an alert sent to my phone. And in order to set an alert, you would right click and press place alert. Now we're in back testing mode, so that's not possible, but you can do that normally. So now we're gonna see what happens, right? So and I'm not doing anything now. I'm not looking at my screen, and all of these candles is 1 hour. We've been in the trade 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So when it hits 1% profit, then I would move my stop loss to break even. And now I put in another alert when it hits 2%. And when I say 1% and 2%, it's based on my performance. So if we're risking 1% of our entire portfolio, to remind you, we have a 100K account and we're risking 1,000 risk per trade. That's what we're risking in order to make 3,000. So 1% movement when I talk equals 1,000 in this example. So if it goes to plus 2,000, I then move my stop loss to 1% profits. I'm locking in that profit, and it's not exactly 1% I'm moving it to, but we'll talk about that. All right, let's see what happens here. Oh wow, okay, so let's have a look. So we're just above the stop loss there, so we're still in the trade. Let us have a look here. There we go, we're getting there. I mean, you see, we can be in the trade for a few days even, and boom, we got taken out at break even, and that will happen. So now when I'm out of the trade, I take a new picture, and I would now put this in here, and I would put in the result 0, boom. And I can even write a note what I liked about the trade, what I didn't like about the trade, but this will create consistency for us. So now we have gone below the moving average. So now the price is heading lower again. And really, we did have, I mean, the larger trend is still a little bit down. And we did here have a descending triangle. So this would have been a good trade to go into as well. So basically, if we go back here, let's see what happens. This here could also have been a good trade. So now we're below the moving average. We can even place a smaller trade here if we wanted to go in as it breaks below the previous level of support. So the same here, when you've done your analysis, you would take a picture of this, and now you can remove the first one just to not confuse you. So currently, what we can do is now to look at this and place a short trade. So we have a descending triangle, lower highs and a lower low. And now all you do would be to copy the link, and I would now put it in here. We're still entering into US, not IS, US 500. We're doing the breakout strategy. We put this link here. Let's have a look. Okay. So now let's see what happens. So now it goes down again, and the same here when I'm 1% in profit. We're not there yet. So we are not yet 1% in profit. So let's have a look. We'll fast forward this a little bit. I don't need to take it that slow. So now we're 1% in profit, and now a great place to move your stop loss is just above if I zoom in a bit, you can see here, the candles here have it went up here and then down again. So now I would move my stop loss to break even, which is plus minus 0. I usually put it a little bit in the green for the simple reason that I want to cover the fees a little bit as well. So now let's see what happens. Okay, we got a very big candle, and usually these comes during news events. So now maybe news hit the market. They usually happen around 2:30 UK time. So this is probably what happened here, and that is why it's so important that you do move your stop loss, because otherwise you might get stopped out of these as well, which would have been fine as well. So now we would take another copy of this or another link like this and put 0 as well. So that would be break even. And really you don't need to put anything, but I think 0 you can put in this example. And if you Google, you will find a lot of different trading diaries you can download. But the reason I think this is important is because when you go back, you want to see that most of them look the same. Let me take a couple of examples here. Nike, let's take some losses. Let's go to US 30. Let's go to US 30 again. Let's go to US 30 again. Another loss. And this here. Look how similar these look. So Nike, you see, you have a sideways moving pattern here, and boom, nice breakout, perfect. US 30, you have an ascending triangle, prices above the moving average, boom, breaks down, takes us out. Here is another one. Let's have a look. Here is another one, right, where you have an ascending triangle and a break to the upside. Here is another one. We have a break to the upside. And here is another one where we can go short instead. So as you can see, this is exactly the way it works. And this is exactly the way we're doing it now. We're just looking for these patterns, and we're just continuing to look for the same thing. So in trading, it's just so important that you get incredibly good at your edge in the market. So now this is very interesting, right? So now what we've gotten is a very big move, probably coming from news. And yes, I mean, we do look at the macro movements. We look at interest rates. We look at inflation. But at this stage in your journey, you want to keep it very simple. So this here might be a really good trade now when we got a very nice flag pole, but we're not placing anything yet. We need to go above here, which we didn't do this time around. So now we went all the way down again based on those news. And now there's not really a pattern. I suppose what we could have done is to said, okay, we do have a level of resistance here as an example. And here we do have a descending triangle. So this could have been a beautiful trade as well, right? Really beautiful trade. And if you were to decide to place this, easy 3%, maybe more. And the way you would have put this in would have been to take the picture and put it in your diary and write 3%. The reason I wouldn't have taken this is because it doesn't work with my rule of that the price needs to be below the moving average. So, but there is a descending triangle. It is bouncing at a level of resistance. So you need to try and trial what's working for you. So it's not always you're going to have great opportunities with one asset. So therefore we have a few different assets that we are looking at. So here is a level of support where the price is bouncing at the moment. We need to see either a break below that, or we need to see an ascending triangle so we could get in this to the upside. Otherwise we might be able to do this from the downside instead. So here, let's have a look. So this could be quite interesting. So we do have a level of resistance here. We do have an equal low over here, a double bottom could be. So this here for me could have been a great trade as well. I just need to see that this is turning up. Otherwise, it might be so many fake breakouts. So the reason I do have that rule that I want this to be tilting up is just because usually you get a lot of false signals if it doesn't. But I mean, looking at this trade, it would have been beautiful. And this is the problem with trading sometimes, that you will have a lot of opportunities all the time. And your job as a trader and investor is, of course, to pick out the best ones. The best ones for you, because all you need is 3-4 really good trades a month. You don't need them all the time. And remember, we're looking at the hourly graph. We are looking at this all the time at the moment, but you don't need to look at this the whole time as we're doing now, because you will set alerts and look maybe once a day. I mean, this period is from 15th of August to 20th of August. It's 5 days. So there's no reason to spend all the time here. You spend time when you have the time to do it. Here, great setup once again. If we do get a break, what I like about this trade is if we break here, we probably break the level of resistance, which is perfect, fits with my rules. And it also means that it's going to, hopefully, carry on the trend. Because remember, the thesis we have is that it's going to create higher highs and higher lows. So that's the thesis we have now. So let's see what happens here. Remember, we would take a picture. Let's see here if I can make this happen. Restore pane, double click. I'm sure I can. I remember I did something here. Move pane down. Oh, shoot. No, that's not it. This has happened to me once before. I don't remember what I did to make sure that we get this back. Maybe it was, yeah, it was escape. Okay, cool. So here we go. So I'll take the picture there. And what I would do is to put it in here again, US 500. And you have the breakout. Again, you put the picture in. Let's see what happens now. So now let's see. We are not in it yet. It hasn't broken above just yet. Let's see what happens. Okay, so this broke down. It carried on the trend a little bit. So now we would delete the trade. So we never got in. That's the reason we place a stop order to take us in as it breaks higher. If you zoom in, I mean, maybe on some on the spread, but not on these big ones. This is not enough. So it didn't take us in. That's the reason I place a stop order. And this will happen as well. Now we need to recalculate and reboot. So I don't fill this out in the sheet. I just want to have the ones that I'm actually in. So now we went below again, the moving average. So this has been a little bit of a consolidating pattern. This is why it's been a little bit tough to do this. But here now we have another opportunity. We're above the moving average. It's still trending slightly up. So let's give this another go. So I would now look for this a little bit bigger pattern, right? So we wanted to break above the peaks there again. We do now have a higher low like this. This is quite a big trade. So now if we have a big trade like this, I would go in and put my stop loss underneath a recent low. So that would be a recent level support, which would be here, just below that. So let's now have a look at this and see if this can treat us a little bit better. And remember, now we're just doing this based on a technical basis. So we would normally add some fundamental analysis. Where is the market doing, and interest rates, and all of these incredible things. But now let's just do this technical. I believe it works just to do this technical. I've done this so many times before as well. And I've traded for a very long time, as you can see on the results. So here, we have a good trade. We're now in the trade. Let's see if this could be a winner this time. Maybe winner, chicken dinner. We will see. Or maybe it's a loss. So now it might be retesting the level of support. Okay, so we're a little bit in profit. And now we went into a loss. Boom. So that was a 1% loss right there. Now, did we do something wrong? I'm going to say no, not with the strategy we're using. So this would have been perfectly fine to have a loss there, like this, and minus 1%. So that would be perfectly fine. So now what I would do is I wouldn't go long unless we now break this level of resistance. It's been there now a couple of times. And the level of support that we're trading from would be, the bigger level of support is all the way down here. So currently we need to see what happens We might be able to go short here, or might be able to go long if it breaks up, because sooner or later it will decide of where it really wants to go. So we will see when that is. So let's see here. So now there's an opportunity here. Really, I pressed a little bit too quick there. So here would have been a good opportunity, a descending triangle from the top, and here we would have had a potential short position with the stop loss a bit above this candle right there, and we would be targeting the lows down here. So I would put this in the diary as well. This fits with the rules. This is tilting down, which is great, and we are below the moving average, which gives us the sign that we can go in. So US 500, there we go, and breakout. I'm going to show you some of my recent trades as well, just so you can see for yourself. So let's have a look here. So here we go. And now, by the way, we are up roughly on this one. We would be roughly up 1.5% in profit. So we would now go to the 2%. But currently, we would have our stop loss. We would have over here at the break even now. So we'll see what happens first. So now it's gone down to our 2%. So I would now move my stop loss to 1% profit. So I will be over here. So we'll move our stop loss down, which is just above this consolidation there. Now we are getting down to a level of support, so it might turn to the upside here. We will see, but we'll keep going with it. So there you go. It jumped all the way down here. So currently we would have made 3% on this trade. So that's the risk reward ratio we're using. And in this case, I would have closed the trade just because we are at a good level of support. And usually when we create these gaps, we do even close them. So this here would now have been the first 3%er. So I'll put this in and we made 3%. Boom. So now I can have another 2 losses before I'm, so we're 2% in profit at the moment. As you can see, it went and covered the gap exactly as we thought it would. So that usually happens when you get a little bit of a hole in the chart. We don't need to go into the details what that is all about, but that was a great trade, I think. So now we need to see what happens. We can remove the drawing, and now we are going to keep going, of course. So let's have a look at this. There we go. Okay, so now it just goes sideways, and here we go. So this is now looking good. I mean, this here, the same there. I was a little bit too quick here. I'm getting a few alerts here on my trading. So this here would also have been a really good trade that we could have placed, right? So this stop loss a bit below there, and we would aim for this to go up 3%. This would have been a beautiful trade. And the reason I would place this regardless, so usually what I see happening is if we go down to a solid level of support where the price hasn't been before, then usually if you can see here, it did actually go below the low, but it closed above again. That's usually a sign that, okay, it was a fake breakout. I'm going to go up again. And usually it goes all the way back up to the resistance. We'll see if that happens. So in this case, we got a good pattern. We have higher lows, higher highs. We're above the moving average, and we are now breaking above. And we put the stop loss underneath the latest low according to the rules. And now we're aiming for this to go up 3%. And as long as it's more than 1% up to the resistance, I'm happy to place it because then we're moving our stop loss anyways. So I'll take a link on this. US 500. We'll do a breakout and we'll put this in. And now we'll see what happens with this one as well. So we just need to be patient, waiting for opportunities. I mean, we've placed 4 trades now, what, in a month? So it's not a lot of trades we're placing, you know? So that's really important for you to understand that it's not about the number of trades we place, it's about the quality of them. So now this trade is currently up 1.6%. You know the drill. We would now take the stop loss, move it here to break even, just below this long wick down. If I zoom in, just below that long wick down, I think is excellent, excellent place to put it. So let's see what happens now. So let's see if we can get it up to 2%. Okay, we just got above there. Maybe it was a fake breakout. We will see. Currently, we're holding. So let's see here. Okay, so that gap down would have taken us out at break even a little bit in profit. but let's put it in as break even. So we would have made a little bit, but break even again. Now that sucks because I think this is going to go up and cover the gap, and well, then we'll see, of course. But you see, it covers the gap, and let's see if it was a good decision, you know, and then we'll keep going. So I think you understand the drill here. That's what you got to do. And the sweet spot, and this is now, if we go back to the formula, what we have done now is basically step number 3. This is now demo back testing, and we're going to look at some demo trading as well on how you can do that. We looked at that in the last video as well, a little bit, right? How you use TradingView as a broker. So this you need to do for 200 trades. Yes, so if you do 10 a week, that's 20 weeks, but I cannot tell you how important this is. Now, listen, I know this is tough to get started to, and in the beginning, you won't barely know what you are looking at. So that was for me in the beginning as well. And many of you know my story by now. I mean, I lost, how much did I lose? I mean, I lost over 100,000 when I started trading because I had no clue what I was doing. But if someone just would have taught me this, that I should, before I start live, spend the time back testing, my result would have been so much different. And understanding the statistics and data behind your strategy. Now, regardless of wins and losses, I am more than happy to place trades. It doesn't disturb me at all if I have a loss. Well, a little bit. I really love to win, but I don't act on it because I know it's part of that probability game. And if you want to, right, down below in the description, you will find links so you can join us for our trainings. If you would like to, you know, be with us live and how we can do this. So make sure to look in the description and see if you can sign up for something there. But when you really understand this, you know, it becomes really, really, really cool. I want to show you something here that I think is absolutely amazing before we go in and we place a few trades as well. I want to show you this here. I'm going to search here for this. So now when we've done a few of these back tests, we are starting to get some good results. We've done 33. You can see return 3.2%. You can see win rate 42%. And I mean, if we look at the real results we're having, and have a look here at the trades that we've placed. I want you to have a look at US Tech. I want you to have a look at this. I want you to have a look at this. So the latest 3 trades that I've placed, you can see here, ascending triangle, fake breakout. Boo, can happen. And this is the same. We had a good breakout on Tesla, fake breakout. And then on oil, we had the same nice breakout, ascending triangle, broke up, made 3%. So these are trades, you know, that are looking very similar to what we just did. And I'm just doing those live instead. And when we know the data, you can see maybe over a whole year. Let's look at the last year. 2024 is 67%. I want you to do the math of this. I mean, this is 5% a month. Maybe, you know, it's even a little bit more, but 5% a month compounded. And have a look at this. In the description as well, you will find the link to see our compounding calculator, because this is where the magic happens. So if you put in your starting capital, so let's say you put in $2,000 or pounds, you make 3% a month, or I mean 10,000, whatever you want. You add an extra 100, and you can even top up if you want to as well. If I press calculate, have a look at this. So basically, and this is really cool, in the beginning, you have $2,000. And at the end of the year, you have $4,000, right? Because you're not only making 3% a month, you're even adding 100 each month as well. So it's going quite quick. Next year, 7,000. Next year, 12,000. Next year, 18,000. And after 15 years, you would have broken the £1 million mark, despite you just put in 2,000 at 100 a month. And now you wish you started with this years ago. If you want to try this out yourself, there's the descriptions on how you can use this. Make sure you write in the chat. And, oh, sorry, not in the chat. Maybe leave a comment or look in the description. You should find it there. Free, of course, and have a look at it. It's really cool to see. And now I'm really seeing this playing out over time. And now you might say, Dennis, I don't have 2,000 or I don't have 10,000. I need money now. Great. Then when you learn how to trade, there are other options like prop trading that we've spoke about before. So this is funded next. I think I showed you this in the last one. The same here in the description. You find the link to this. But basically, you can see here, this is one of my live accounts. And currently, I have 3,200 in profit. And I have my payout liable date, 5th of September. Today it's the 4th when I'm recording this. So I'm going to get 80% of this tomorrow. And so if you don't have any money, this is a great way of doing it, because this will teach you how to well, not teach you, but this will allow you with very small amounts get access to hundreds of thousands and then get payouts from it. Now, this is very important. We don't do gambling. So this is a risk reward play. So I have paid £500, I think, to $500 to get access to 100,000. Now, with my first payout, after I pass their challenge, I get that amount back. They refund me the fee, and then I'm getting 80% of the money there, and that's going to be scaled up as well. And as you can see, up until this point, I've now gotten, of this account alone, £8,900 or dollars in profit. And as I said, this is something you all can do. I've put $500 in, and they paid me that back, by the way, and I've got the $9,000 in payout. And this is something every single one of you can do. You just need to practice, and just need to get quite good at it. And then you will see that you can do this as well. So don't be intimidated by this. Focus on learning the skill. When you have learned the skill, you will be able to do this, right? Now, let us go to the next step. And the next step, if we look at this, is to place trades yourself. And then you do 10 to 20 trades. Then you ask for feedback if you have a coach and mentor. Otherwise, you need to review your trades. At this point, number 4, you review your trades. And when your data shows you that your results are good enough, when your data shows you that you have a good win rate, you have a low drawdown, and you have more losses than wins, and your return is positive, and you've done 200 of these, then that seems to be the sweet spot. Maybe you need to do a few more, maybe a few less, but that seems to be the sweet spot for you to get really good results. All right, that's at least among our clients. And we literally have thousands of reviews as well. So make sure you go and check those out on Trustpilot as well, and we have interviews with our clients, etc. Right? So, but I just want you to feel that you can do this as well, and hopefully by us doing a little bit of back testing here, you are now feeling that you can do this as well. Now, let's circle back a little bit here, and I want to have a look at the markets right now to see if there's any opportunities that we can find. So let's have a look here. I want to be looking a little bit here at the market to see there might be some good opportunities as well. Yeah, interesting. Okay. So what are we doing here? Oh, this went up quite a bit. That's nice. I'm in this trade at the moment as well. I entered, as you can see, I entered here on this trade when we broke the downward trend and it broke above the 50 moving average. Voila, that's exactly what we're doing each and every time. We just rinse and repeat, right? That's all this is about. I'm just keep doing the same thing because that's what I'm good at, and you might become good at other things as well. So I just want to mention this. Now, there's a lot of good brokers out there, but if you really want to use a broker and you get using TradingView, have a look at this. So basically, I think we spoke about this last time as well, right? And in part 1, if you didn't watch it, make sure you do, as I've said before. But if you want to do prop trading, which you can do with Funded Next, prop trading, I would use MT5, right? Get used to using that platform. Watch videos online on how to use it, because that's the platform we are using for that. And that's the biggest one, right, in the world, or one of the biggest ones when it comes to trading, when you trade Forex and the indices and currencies. If you want to trade stocks or other things, or your own money even, you can use interactive brokers. Now, the cool thing with opening an account with interactive brokers is on TradingView, you can connect the account. So as an example now, I'm just going to show you. We've opened this account to be able to show you here. I'm going to see here. I'm just going to post a video while I log in so you can see for yourself how it looks and what you can do with it. So now I have logged into this account here, right? So as you can see, it might be a bit small, so you might need to zoom in or something. But you can see here, we have around 30,000 in this account at the moment. And I'm in Tesla at the moment. And if I press on Tesla, have a look at this. It is so cool, right? So what you can see on Tesla is you will be able to see my entry point right here. And you can see that I'm making profits and a loss or whatever it might be. So personally, I think this is awesome that this is possible to do and that you can connect it. Now, if you look at the platform, you can see for yourself, we started a while back and we have done pretty well. I think we're up 60% or so. I think since we started with 20,000. We tried to take this to 100,000. And, you know, you just have the track record and everything on here as well. So we're trying this platform as well. So this is really cool. And it looks the same. If I want to place a trade, let's say I want to place a trade now on Tesla. And I put one of these on as we've been practicing. Like that. And if I right click now and I press create limit order, it's literally going to create the order on my account, right? It's creating the order on my Interactive Brokers account. So it's connected via an API, and then you can trade just as you've been practicing on demo here. So hopefully that makes sense. So that's a broker you can use, and I think this is a game changer and really, really good to do. Now, if we log out and we log into the paper trading, it's going to work the same way. So in the paper trading, you will have 100,000. So let's have a look here and see what we can do. So if I go, for example, we're going to see if we can find some interesting opportunities here. Now oil has gone down to a level of support, but we're way below the moving average, so nothing to look at. Here, on the other hand, I think this looks interesting at the moment. So basically, we're here having, we can remove all the drawings. We're now gone down to a level of support. We're on our way to a level of resistance as we've been practicing. And currently, we're having a level of, we have an ascending triangle. We're above the moving average. Looks a little bit like we've done before. I would put my order in, stop loss a little bit below, and I would aim for this to go up. And now what I would do is I would right click on this and I would press create limit order. Now we are entering with a stop order, not a limit order. So we want this to go up, and then we can see down here it says minus 1,000 in case we're wrong and plus 3 in case we're right. And we can, and here we put the risk percentage balance 1%. We'll let this do its thing. It's gonna take care of that for us. And then here is the price and the take profit and stop loss. And that's depending on this box that we put out over here. That's the beauty of using Trading Me for it. Time in force, I would do, yep, week is fine. It's not going to be active more than that. And I press buy, boom, send order, doink. So now we have placed the order. And all you got to do next is to take a picture of this. And when we go over to the trading diary, we will now have a different trading diary. And you would now just put in the link here and you would put the asset in so we can start looking at the real results you're getting as well, of course, not just the demo results that we're having. So this would be looking exactly like something that we would be placing. And let's look at some other opportunities as well, right? So we have maybe others on the 1 hour chart here. We could even go to look at stocks, but I'm not really convinced just yet of the others. I think that looks the best. Maybe this one, this is the DAX, but this is gonna move the same way as the NASDAQ in a big probability. They're quite correlated. We might be able to place a trade on maybe pound AUD as well. This does look quite interesting, I think, but not really yet. We should have done it down here when I went in on this trade as an example as well, but yeah, not at the moment. And when we look at the others here, maybe US 30 would be one as well, but we placed one on the NASDAQ. So they're going to move the same direction as well. So, yeah, not much to talk about there either. So overall, that's kind of how we do it, right? That's how you can do it. And you can look at multiple different assets. You can look at just indices, maybe a few assets. And I literally spend 20 to 30 minutes a week or a day on this to make sure I get my lines out. So I'm going to do some top-down analysis to show you what I'm doing. And then we're going to go on to the next step. But basically, so far, we've gone through everything you need. So we've gone through how you demo, trade, and backtest. We've done that as well. And now you need to do 10 to 20 and then repeat. And remember, now if you go to the chat, you can download the assets, right? So you can get access to this. What you can also download if you like is to also, we actually have, which is really cool, right? We have written books and about trading and investing stocks and cryptos, and you're more than happy to press in the description to download those, right? We're trying to give you what you need here to succeed. It's down to you, and of course, join our thriving community as well. We're here to support you on every step on your journey. So with that being said, let us now go into the next couple of pages, and make sure you download this so you follow those, right? And you even have a couple of A+ trades from me, so you have something to look at as your recipe. So hopefully that makes sense. Now let us go in and have a look at your next steps here. So we've done this, which is perfect. We placed trades. We looked at the interest. Yeah, very good. There are obviously so many more things I can teach you. You know, we look at smart money, we look at demand and supply zones, we look at a lot of different things, but this is the very simple way to get started so you get a really good feel for the market. So basically to show you one or two of the last things now before we're going to go over to some other things. On TradingView, you watch videos on how to use this. I'm sure we have a few as well. But what I would do now with, for example, the US 30, I would draw a resistance line here. And I would draw a support line at maybe a previous level of resistance, as we do here, at the bottom of this huge move up. And this would be a great place for my analysis and for my trading, because we do trade in the shorter term, you know. So here would have been an incredible trade. We have a descending triangle. It's moving below the moving average and broke down. This is a trade we could have taken, which would have generated stop loss below, above the latest highest point, would have generated more than 3%. Perfect trade. And now just a day later, we have another one. Here you can see, boink, like this, we have an ascending triangle that is now breaking out. So here's another one that fits the rules. Down here, you have other trades. Down here, you had a level of resistance, support. This is just a little while back where it broke the last level of support. Stop loss would be a little bit below, and this would have gone up to around 3% as well. So there's a lot of really good trades we could have placed in the last couple of days. Not to mention over here, if we have a consolidation, just at the level of resistance, a nice breakout as well. So these patterns happens all the time. And the trick is just to know which ones to get into and which ones not to get into. So just to summarize this now, this is literally, when you get used to it, it's a couple of minutes work in order to do this properly. And in order for you to really get good at this now, I just need you to follow this and be patient. You gotta put the graft in. A lot of people out there, they do say that, you know, well, you just need to learn this strategy and now you can trade it. This is perfect. You know, you look at YouTube, but you need to do the work, I believe, and you need to get used to it, because it's one thing I'm telling you that, listen, I made hundreds of % using this strategy, but if you have one or two losses, it's going to be tough, you know? So you really got to work on it. You need to work on the right mindset. I love the book Trading in the Zone with Mark Douglas. I mean, he does cover it all in there. The mindset you got to have, the strategy, which we cover now, I believe is 20%. And when I say mindset, it's more of being patient and don't take as many trades as you might think. Getting into the mindset of a loss is not a bad thing. It's part of the game. And also the fact that you don't want to trade on emotions or revenge trading and over trading and all of those things. So that's the mindset I'm talking about. So you need to create an edge and then make sure you don't overtrade. You need to make sure you take the best trades, really the A+ setups, and don't trade on everything you see. And that's the thing you're going to be learning. So you need to get the time in the market to really do this. For some of you, this might not be for you, and you know what? That is perfectly fine. And I'm going to show you an alternative to this as well. So, for an example, many of you might be investing. I'm not sure if you are, maybe you're not. But the difference between trading and investing is that trading is more short term. You put maybe 20 minutes to an hour in. And investing, on the other hand, 20 minutes to an hour in a day, could be more as well. Investing, on the other hand, you spend a little bit more time researching, but maybe you spend 20 minutes to 30 minutes a week, and then you stay in the positions longer. So with trading, I stay in the positions maybe for a few hours to a few days. And investing, I stay in months usually as well. So to give you an example, a platform you can use for investing is something called eToro. So eToro is a platform that you can do demo account with, fake money. And here you can see my past 2 years result is over 400% with this. So I'm focusing on cryptos because that's where we are in the market, depending on the market you are entering in and that you are in. But this is the return for 2 years, 400%. And you can see here, 2022, I had minus 54% actually on the account. Because that's the strategy we have. We get in as the market goes down. And then when the market turns around, boom, 189%, 85% in 2024. And I think 2025 will be really good as well. We have been getting out in on the way down now. I think it's going to continue. I've been doing this for years. And it's very easy to get started here. So when you create an account, you don't even need to verify yourself. And when you go into the demo account, which I'm in at the moment, I'm in the demo account. And here I have fake money. So you can see here, I'm up 26,000 on Ethereum. I'm up a lot, right? So you buy and hold, it looks the same. And it's very easy to buy. So if I go to, for example, Solana, and I press trade, I press buy, $10,000, boom. I've now bought some more Solana. That's how easy it is to buy, but you do need to have a strategy. And this video here is a lot for trading, so I don't want to spend too much time on it. But what I can say and tell you is this. I would say if you do want to learn about investing, we might have more videos coming out regarding that. But what I would say is that you should go to the description. You should register to our masterclasses in order to find out more on how you can invest and trade and what's happening in the market right now. So make sure you press in the description to do that if you want to, if you want to get to know us more and see what we do a little bit more. So, my friends, to summarize this video, basically what you have been learning here and what we've been doing is we have been going through, in the part 1, we went through kind of all the basics. In part 2, we went over the importance of a trading diary, tracking your data, going through the rules which you can download and the strategy you can be using to be profitable. And you can also, you've also learned how to place trades either through a live account or place trades through a demo account as well, which we've been practicing, and what to look for. Now it comes down to you to practice. And I must say, you know, the first video we sent out was a very big success, I think, and people are really happy about it. So please leave comments below, like the video, and leave comments below as well. I would love to find out what you're learning. We've been dedicating a lot of time doing these videos. I would love to see what you've learned. I would love to see your result. If you found this valuable, you know, please share it with others as well. So I really want to thank you for doing this part 1 and part 2 series, right? And I just want as many people as possible to be successful with their trading and investing. And we are here to support you and help grow the community. The main reason I'm doing this personally is because I lost all of my money starting out. I had no clue what I was doing. Fortunately, now I do have a clue what I'm doing. And I want to help empowering as many people as I can to do this, which is the mission that we have. And I just want to, with my whole heart, I want you now to put a few months to just practice this. Don't do it live to start with. Make sure you get the data to back that first. And then I would love for you to start doing this on demo first, but then go live, of course, and share your results, ask us questions. We are here to support you on every step of your journey. So with that being said, thank you so much for watching this. And if you're one of the few that watch this to the end, you're actually, there's not normal nowadays to watch an hour or 2 hour videos on YouTube, but maybe you have, which is absolutely phenomenal. So I really want to thank you for doing that, and I really appreciate it. I don't take it lightly that you've spent the time with me here, but I do appreciate it, and I cannot wait to hear about your results and hear about what you are doing with this information and how you're taking it on. So with that being said, enjoy, and I look forward to seeing you soon.